So as usual, we've gone through the theory on our nice perfect line diagrams, but let's see how the theory actually can be applied to, real live, well, not live, but real price action examples. So we're on the 4-hour chart again on euro dollar, sort of starting around from March 2022. Now I've already got, the market structure drawings on from the previous walkthroughs we've done, just to simply save a little bit of time here, right? Because this is a reasonably simple concept, and I don't think we need to spend ages kind of going through back bar by bar, putting all the price action and drawing it on, but I kind of just want to show you how we can overlay the premium and discount tool just to help us, anticipate and manage our expectations of where we anticipate price to reach, where we anticipate it's more likely to turn. And yeah, it'll become obvious as we start to go through it. So let's concentrate on this swing range that we're looking at, right? Where we have that swing break of structure. That's then obviously our swing high, and then we start to pull back. So that is our swing range. So when we start to pull back and obviously have what we deem to be significant enough of a swing pullback with this movement here, we can obviously then mark on where our swing low is. Once we have that, we can then draw on our premium discount. So whether you want to draw it from the low to the high or the high to the low, it doesn't really matter, right? And depending how you want to draw it, some of you may want to rein it in, be a bit more minimal. That's up to you, but you can see that what I'm trying to measure here is from the swing high down to the swing low, and then that dashed line we know is essentially the EQ, the equilibrium, right, the halfway point. So when we start to pull back here, right, clearly have that big swing pullback, start to break internal structure to the upside, we can anticipate that a very simple expectation is that price is likely to pull back above the EQ to those premium prices. Now, obviously, there's other confluence we're going to look at, supply and demand, and things will bring in and liquidity, but we just want to be thinking about market structure, and we're lumping premium discount into that concept. So when we initially get that internal break of structure, and then we start to pull back, right? If the internal structure is going to stay bullish, then we can anticipate there's a strong internal low here, right? And we can look to catch that high low to target that next high. So like we were saying, right, we can then add on the premium and discount tool to this internal leg as well, okay? So this obviously being up here, the swing range, price has pulled back up a decent amount, hasn't quite reached the EQ, and we know it doesn't have to, but the fact that it hasn't, the fact that the internal structure is bullish, and then we pull back down into the discount of the internal leg below the EQ, right? And then you get a nice, decent, strong chock, right? Clear close above, multiple candles, pull back into demand. Again, we'll talk about this later, but for some of you who have previous experience or who are going through the course of previous time, right? You can see nice demand level here. We've come in, we've then had a strong bullish change of character, giving us another demand level, right? We're in the discount of the internal leg. We haven't yet pulled up to the premium of the swing leg. So that essentially means there's an increased probability that the swing pullback is not over, which means there's an increased probability the internal structure is likely to have another bullish leg, right? To try and target those premium prices of this larger swing leg. Okay, so the point I'm trying to make here is that this can be a decent or high probable scenario in which to trade counter to the swing trend, but pro the internal trend. Okay, so again, I know some of you, this will be super simple, but let's just say it one more time, right? We have that swing break of structure. We're expecting a swing pullback. We never know how far it will pull back, but one thing that can help us is the premium and discount pricing. And we can try and target price to pull up to those premium prices. Okay, the internal structure then shifts bullish, so then we can mark out the high and the low, right? Then you have your EQ of that leg. And we know that price doesn't have to pull down to here, right? It just about taps the EQ here, and we did actually get a bullish change of character. But you can see here, if I zoom right in, oops, didn't mean to do that, over here. All right, we spoke about this in the walkthrough. It wasn't really that convincing of a change of character, right? It came up, literally just spiked it and closed back down. There was no real follow through, and then we came down lower, more into discount pricing, getting into a nice level here. We'll talk about this in later lessons. Nice demand zone in the discount. We then get a nice strong bullish change of character, and then we can look to buy within these buying opportunities, right? To then try and target that weak high. And there's the increased probability that that internal structure will continue for at least another leg, because price has not yet reached the premium of the swing leg. Okay, so hopefully that makes sense. And again, you can just keep following that internal structure, right? We get another IBOS there, so you can draw it from the low to the high, and then look for price to pull back into the discount, and then look to get another leg. Now, at this point, when we get that next break of structure, you see how we're above if I drag it across, we're above the EQ of the swing now. So now we're in those premium prices. There's an increased probability that the swing pullback may now be finished. because we've got to those premium levels where sellers are going to more likely to be stepping in. There's going to be less buyers demanding prices at those higher prices, right? Demanding to purchase this currency at those higher prices, as currency pair, I should say. So this is when there's an increased probability that sellers are more likely to take control. So when we get that, internal break of structure here, and we're expecting that internal pullback, and then we get the bearish chock. Yes, from a market structure standpoint, we don't have structured alignment just yet, right? Because obviously the internal structure is still bullish, and our signal or our true confirmation that the swing pullback has finished is when we get the internal structure shifting bearish, right? When we get the internal break of structure. But because we are above the EQ of the swing leg and we're in those premium prices, now you're starting to see how the more confidence you have, again, tons of more concepts you're going to learn, but this is another tool in the box you now have to anticipate, maybe now I'm happy to trade against the internal trend and short this because there's an increased probability the swing pullback has now finished, and now we're ready to target that week low, right? So then when you get the bearish changes of character, on a lower time frame, intraday, we can start to look for shorts to anticipate potentially we're going to get that move and eventually take out the low. And it's all because of that, right? So pretty simple tool, but you can see how you can start to piece it together to give you trade ideas of potentially when you want to trade against the internal trend, how far you want to push your targets, right? So if you're buying along here, some of you may only want to target the week high. Some of you may want to try and push it up higher to like the premium levels of supply, right? And the premium of the swing range and all of these sorts of things, right? So it's just another tool to help you manage your expectations of how far price is likely to go, and then what you expect more likely to happen next, okay? And obviously then we get another swing breaker structure. And as you'll see, right, a lot of the times, so if I draw it from the next swing high to the next swing low, price isn't always going to pull back up that deep. It's not going to pull back up to the EQ. It's just a tool to help us try and anticipate, like I said, the more highball scenarios. Again, we have this swing leg, price does not come up to the EQ, and that's totally fine, right? You can see that the market's quite impulsive. There's a lot of momentum. And when that happens, typically it won't always pull back to the EQ, okay? And again here, right, from the swing high to the swing low, obviously it does pull back to premium prices. So this would be an area in which, we can look for shorts as we come into more premium levels. But in the end, the trend's not going to stay bearish forever. We're going to get those pullbacks. And again, obviously there will be other confluence. You will learn multi-time frame analysis, supply and demand zones, where potentially we can anticipate that trend may change ahead of time. Okay. So don't be disheartened if you see that this obviously doesn't work 100% of the time. And then obviously we switch bullish, pull back to the discount, but then we end up switching bearish again. Okay. And this will all become clear when we start to look at multi-time frame analysis. So this looks a little bit messy because we have drawings everywhere, but obviously in the live market, I wouldn't leave my charts like this. I'd be cleaning it up constantly. I'm big on, let's call it chart hygiene, right? But OCD with the charts, but you'll start to see that as we look at the live charts more. This is just for, the purposes of doing walkthroughs, right? It gets a little bit more messy. Now, this price action example, you should hopefully be very familiar with because we went in on depth on a lot of the last videos, particularly the 3 types of structure. But I think this is, again, another very good example of where premium discount on both the swing and internal can really help you when you have such big, massive, expansive ranges like this swing range, because it's not always going to be like that. Like if you back here, right, it was quite small. And this is what I was saying in the theory video, right? It's not always going to be where you get those big internal breaks of structure, like how we do, sorry, I know I'm jumping around a bit, like how we do over here, where this was our big swing range, right? And then we got nice big pullbacks within there to work with, right? That's when you've got the big, nice, clear internal structure within the large swing structure, just because when we got the break, there was one big impulsive move. So when you get that big impulsive move after the break, that's what then leads to there being a big range, right? Like this big swing range. And that's where understanding internal structure really can help a lot. But then in other instances, the market won't be as impulsive or as expansive, like over here, and it's a bit more simple. And that's where you can, put a lot more weight on change of character, more so than internal structure when you kind of get these smaller ranges, right? And then you get like a choke here and things like that, okay? So yeah, just kind of want to make that point. But as this is quite a volatile period in the market where we get these big movements, these big expansive ranges, this is where internal structure and the premium discount on both the swing and the internal ranges can really help. So we know that we get that internal break of structure, right? And we really start to move to the upside with a decent amount of momentum. So then we can mark this out as our swing low, right? Cool. And then what you can do once you know where your swing low is, put on a pretty grey circle, is you can mark out from the low to the high, right? Get the fib tool, and we'll just do it like that just to keep it a little bit more clean, okay? I'm just going to drag it in a little bit. So okay, we have a big swing range. We know we're bearish. We're looking for price to pull back to premium prices. And then ideally we want to look for levels within here, right? In the premium prices where we can then look for price to short. From an internal structure perspective, what do we expect? Well, it's shifted bullish to facilitate that swing pullback. So we can keep, in theory, buying these higher lows and targeting these weak highs, right? These are strong lows that take out the high. So as price is coming down into the strong low, again, we can look to buy from within here, target this weak high. But as we come above the EQ of the swing range of this previous swing leg of price action, right? We have to start to think that, okay, there's an increased probability that the swing pullback has finished. There's an increased probability that the internal structure is going to switch bearish. And then when it switches bearish, right, then we have true structural alignment because the internal structure is realigned with the swing structure. And then we can look to short these lower highs because this is a strong high now, right? Because it took out the low, so price can pull back, but in theory, it shouldn't break it because it's a strong high. And we can look to try and catch this move to target the weak lows. But actually, because we're now trading pro swing trend, and because the internal structure has realigned with the swing structure, there's a good argument, right, for us to target these weak lows, the weak swing low, because we expect the bearish internal structure to hold until it takes out that low, right? So that's just kind of a quick refresher of the internal structure framework that we use with the swing structure. And now all we're simply doing is overlaying the premium and discount tool, okay? So now as we start to pull back on the internal structure, right, there's obviously a few levels we can look at to buy. But again, if we want to use premium and discount, just as another little tool, again, no guarantee, or you don't have to wait for price to pull down into the discounted levels to look to buy. It's not always going to do that, right? It might come off a level within here, and that's more than okay. It's just to add the confluence and to show you where the higher probable areas are, right? So we come into these levels, we mess around for a bit. Okay, bit choppy, bit sideways, which is to be expected when you're trying to trade those counter trend pullbacks of the swing. Okay, now we tap into it below the EQ. We then get a nice sweep of liquidity, which you guys will learn soon. We get this bullish shift in change of character, right? So now, okay, we tried to buy here, but it didn't quite work out. We came lower, but now we're below the EQ of this leg. Okay, now we've had a nice strong bullish change of character. Maybe now it's high probability to at least target here, but try and target those premium prices, right? Because we haven't yet pulled back up there. There's an increased probability that price wants to go there, right? It wants to reach where those premium prices are to find where those sellers are who are willing to sell at high prices, okay? And then we eventually get that, went a little bit faster, but we get that next IBOS here, okay? And then again, this becomes our strong low because it took out the high, right? So this is our next range, and we haven't yet, we look left. No, we haven't yet reached premium prices. So this is where, again, we can look to try and trade another leg to the upside, and we want to try and buy within the discount of this internal leg, okay? And then target the high again, right? Which we know it eventually reaches. Now, where have we reached? Now we've reached premium prices just about, you see that? Just zoom out a little bit. All right. You can see here, we just reached that premium price of the leg. So now we have to start thinking, in the back of our minds that the internal structure may start to shift bearish because we're now in premium prices and it's likely the swing pullback now may be ending. Okay, this is our current swing low. Sorry, our internal low. Now, again, just because we get to the EQ doesn't mean it's suddenly going to tank. There can be plenty of times where it can keep going for a long time and come all the way up to the extreme, or of course even shift bullish, right? But it's just showing you that now trying to trade against the swing trend and keep buying the internal trend can be lower probability, and then we eventually shift bearish. And then, like I said, right, once you have that structural alignment, very often, not always, but very often price won't pull back that deep. Like, if you were thinking, okay, let's try and see if we can catch the pullback into the premium of this internal leg, it's not always going to happen. So this is where you may want to be a little bit more aggressive with kind of selling down in the discount now, trying to target this low. And you may also, want to be a lot more conservative with trying to play these, these longs to play the internal pullback, okay? Because it's getting lower and lower probability. So that's it really with premium discount. I wouldn't overcomplicate it too more than that. Like I said in the theory lessons, for me, it's not a massive confluence. Probably kind of one of the last things I really use in terms of will I or won't I enter a trade. But where I personally really use it a lot is just to help me understand kind of what is more likely to happen next in terms of, when we're down here, okay, I'm potentially a lot more happy to trade against the swing trend because we haven't yet pulled up to here. Whereas when we do get up to here, okay, I'm going to be a lot more cautious buying, from this strong low here and getting long here. I'm not surprised, that ends up failing because we've pulled back to premium prices. There's other confidence we can look at, but just thinking about that for now, that's a good reason as to why, right? And that's literally as complicated as I think it needs to be. So hope you guys took some value from that, and I'll see you in the next one.